David Hunter, welcome back to Face. How are you, David? There
Hi.
we go. Great time to have you here. And from
Yeah,
the
thank you.
Fed,
Yeah, lots.
a lot to talk about. Why don't we just start with Dave? What do you think Paul's going to do in his statement tomorrow? Is it going to be a mean man again? Is it
Yeah,
going to be
it's
mean?
hard to believe that he's going to be anything but hawkish. I mean, he may. I think he's got a committee that's starting to move in the direction of saying we don't want to overdo this. So I think some of the conversation coming out of the FOMC is going to be more mixed. But Powell himself, I think he's still got his eye on the market. And obviously the market's moved up from 3,500 to,
Yeah,
3,900 on its way to 4,000 here. I just don't think he wants the market moving up. So,
right.
so I have a hard time seeing a lot coming out of this meeting that can be taken dovishly. Now, again, I suspect they're going to make some noise about, again, I don't like to predict levels, but I guess tomorrow 75 basis points. That's certainly consensus, and
Right.
and maybe 50 in December. So they might start making noise about that. But again, and I think this is very wrong-headed, but he's bought into Dudley's view that the stock market has to be a lot lower to tighten financial conditions. It's
Right.
probably going to go down in history as one of the stupidest things that the Fed's ever done, is getting caught up in that and thinking they can be the predictor of where markets should be. But that seems to be the narrative he's bought into. So it's hard for me to see anything tomorrow that's going to be dramatic. I mean, I have no doubt they're going to make some noise about, you know, we need to be cognizant of going too far. We don't, we're coming closer to the end, but I think they're still going to be talking about 5% Fed funds rate, and basically several more hikes to come.
So what do you think is going to be behind a market move or a catalyst to take the S&Ps above this 4,100? This is a weekly trend line from all-time highs, and there's a lot of confluence up there at 4140-ish. Fighting the Fed, is the market just going to be up into their face for the rest of the year into the spring? And even though they continue to be hawkish, we could still make new all-time highs next year, Dave? Well, how do you think that plays out with the way the Fed is acting? And I saw a headline on one of your interviews that you thought the Fed was nearing a point of no return.
Yeah, they've already gone to that point. I think they've caught, the seeds are sown for a global bust. So they have gone too far. As you know, inflation is a lagging indicator.
Yeah,
As you know, the jobs are a lagging indicator, and those are the two things they're watching. So they're,
yeah,
again, I
they're
think this is amateur hour at the Fed. I understand they're focused on inflation, thinking they have to see the whites of the eyes of a dramatic drop in inflation before they're going to change, but that guarantees they're going to be way too late. So that's what I mean. I think he's gone too far. In terms of the market, I think probably 4,100, 4,150 marks a point from which we could see a sell-off. This is going to be a stair step. It's not going to be a straight up to
right,
6,000. So
right.
you could
So
see,
really
and
not
again,
not a melt up this time till the
well, no,
final
that's
stage.
no, I want to be really clear, because people take that term and apply it to everything. It's a bull leg that started, in my opinion. We saw the turn, we saw the end of the bear market, or the end of the correction, on October 13th at 3490. We are in a new bull leg. The parabolic part of that leg, which is the melt up part of that leg, is probably 5,000 to 6,000, or 5,000 to 7,000. It's going to be the last stage is going to go straight up. So, it's not that you're going to melt up
It's at the
from
end
30.
of the move.
It's at the end of the move, which is always the case with the parabolic. That's when it
Right.
comes. So yes, you can call this all a melt up rally because that's what it leads to. But we're not in a melt up, and I get that on Twitter all the time. Are
Okay.
we in the melt up? It's we're in a new bull leg. That's what I believe. And
Okay.
that new bull leg started at 3490, 3500 on October 13th. But that, let's say we go to 4100,
It was
4150
right here.
and back off to say 3900.
Yeah.
And again, I'm not saying that's exactly what's going to happen. I'm just saying those are possibilities. And then the next run takes you up to somewhere closer to 4600, 4650. That's the kind of stair step I would expect. Now, somewhere in there it will surprise. It could be at 4100, it could be at 4600, could be later where it's going to just blow through and keep going. But
Okay.
you
All right.
chances
So
are chances are with the backdrop we've got in terms of the Fed and an economy that's going to continue to weaken, that those resistance areas are going to at least cause some sort of a pause and back off before you go higher.
okay. What do you think of this? It's kind of a repeat of what happened under Volcker, just not at the same levels or magnitude. Is that we do get the Fed, even though they've been extreme, give us a pause, and maybe that's when the parabolic stage begins, and it could be next in the winter sometime. And then we're making new all-time highs, and they have to come in and start to hike again. Kind of
Yeah,
like a pause and then a hike.
100%. That's my anticipation, is that we will see a pause. I doubt that we see a full pivot to
No,
cutting rates again. But
no.
I think, as you're seeing, it doesn't take much to get this market going. I think you will see a pause. It could be in December. It could be
Yeah.
in January, February. But there's going to be things along the way. Everybody wants everything in linear fashion and in black and white. They'll be, just having some of the Fed members, some of the FOMC members come out saying they're questioning further hikes will be something. It doesn't mean they have paused yet, but those will be things that will add fuel to the upside. So yes,
Okay.
I think you're right that we'll see a pause at some point in the next few months. And it could be sooner rather than later. It's just not likely tomorrow tomorrow.
The bond,
Because
the bond vigilantes, David, have really had a field day in the gilt market, and I mean, you look at what
before we go there, Dale, let me finish
yeah,
my thought. Okay, so
okay,
yes, you're right that we can move up, and then imagine what it's going to be if Powell sees 5,000 and 6,000 and maybe even 7,000. He's not going to sit there and say, okay, I guess I was wrong. He's going to say, my God, if I thought the market was too high at 3,500, I sure think it's too high at double that. So he's going to come in and tighten again, and that's what really cinches the bust. So again, I keep saying there's a very wrong-headed narrative that is driving the Fed's thoughts. And I can't say whether all the members have bought into that narrative or whether they're kind of just respecting Powell and saying we'll follow along for now. But it's scary. The groupthink right now suggests that they're all on the same, singing from the same hymnal. And it really does suggest that we're gonna take this thing right into the tank. So yes, I think that's kind of, it's not exactly Volcker, but yeah, you could have that pause and then come back again.
okay. So with Paul conducting this monetary policy, and it's hard for me to believe that they don't know what they're doing. Is there any intention about this?
I'm
To wreck the economy?
I have little doubt that this is just wrong-headed thinking. It is not
Okay.
deliberate. I understand the thought process out there. I mean, I'm a big New World Order person. I do believe that the Biden administration is doing lots of things that are not just by mistake. I do believe that what's going on around the world is moving us towards New World Order. There's certainly been plenty of stuff coming out of Davos and elsewhere. So not everything is by mistake. Some stuff is deliberate, but I think it's very easy to see that the Fed is just caught in thinking we really screwed up, late last year, early this year. We have to make up for that mistake, and they're just, they're caught up in this. What is really, I think, and I call it the amateur hour, but what I really think is damning is that Powell, even though he gives lip service to understanding leads and lags, does not really seem to understand that you just can't wait until you get results from your policy before you pivot. By then it's too far along. But on the other hand, understand the dilemma they're in. If they pivot too soon and inflation goes back up, it makes their job even harder. So they're trying to walk a fine line, is what I think they're doing. And lots of people have agree with me that they're going too far, but lots of people don't. There's plenty of Wall Street cheering them on and saying you got to tighten more. You should do a point tomorrow. You should do 2 points or whatever. There's people that really believe that inflation is going higher. I believe it's peaked, but it's the evidence is not clear yet.
Well, I think it's pretty clear because
Well,
you
it's
know
clear.
what? Yeah,
It's
you know
clear
why
to
it's
you
clear? Look at this. Okay, so I don't care what Fed policy is. The minute the Russians killed the UN deal, we have a huge move in the grains beginning again, and I don't see how Fed policy is going to have anything to do with it. In fact, we have an El Nino year out there, and they could take down economically sensitive commodities like copper, etc., but they can't do anything to stop this bull market in grains. And this is not something that's just starting. This is something that's been underway, and we just had another pause, but we're going to new highs in the grain. So how do they control that? Food
Well, I agree.
inflation.
There's parts of it that don't have anything to do with their policy or that they have no control over. I agree with
Yeah,
that. But
yeah,
we do. I thought you were going in a different direction, which is we do have plenty of evidence in terms of housing. We do have plenty of evidence in
okay,
terms of lumber prices. We do have plenty of evidence in terms of copper and steel that
yeah,
the economy is getting slammed, and certainly the consumers had built up savings and had things, but even they are really starting to show they've got to rely on their credit cards to keep going. And you hear the reports about 35% of small businesses not being able to pay their bills, or consumers not being able to pay all their bills at once. Those are all signs that they've gone far enough and too far. But when I say it's not clear in the inflation numbers they're looking at, and so
yeah,
they're caught in that. My biggest criticism of them is this whole Dudley thing. I mean, it's just stupid. The Fed should have learned from Greenspan's irrational exuberance that they don't know anything about the markets. Markets will move where they move. That's not, his idea that that's important to tightening credit conditions is just going to create a crack up.
okay. Well, something that the market has going for it, and I thought there might be some intervention to turn it, and it was the BOJ and the BOE have been in the markets, and the dollar is certainly trying to shift. It actually peaked, didn't it peak? Well, it peaked earlier, and then this was a stock market bottom on a failing rally. So you finally have the dollar starting to at least correct, right, David? And that's supportive for
I
equity prices.
I think the dollar has peaked. I think the dollar is going tremendously lower. Again, it will be a stair step, but I think
Yeah.
it is very bullish for both the stock market and gold and silver and
Look,
all commodities, frankly. So I do think you're at an important inflection point in the dollar to the
yeah.
downside and in metals to the upside, obviously in the stock market to the upside.
Okay, so and really it's been the dollar, right? They call it the wrecking ball. So it looks like first it was BOE with their climactic sell-off here. It looks like a bottom to me. And then everyone poo-pooing the BOJ, saying that their intervention was a waste of money, and yet we're on the verge of turning negative under 146, which correlates to yields. Look how yields are down 11 bips in the 10-year, David, going into the Fed. All these markets are challenging the Fed, aren't they, for tomorrow?
Yeah, it's interesting. And again, I don't know what day to day is going to do. You could have two scenarios. You could either run up into the Fed meeting,
Right,
be up near that 4,100 on the S&P, and then have a reason for correction when they don't get what they want,
right,
or you could have, you know, what I think Goldman or somebody was calling for, which is some signs of them backing off and at least setting the tone to a more dovish policy going forward. Um, and then you just take off. So I think you have to be a little careful, given what I think is coming, because I think there still is so much bearish sentiment out there. You have to be a little careful not to just assume that these resistance areas can't be busted through. I think the most likely scenario is that you pull back after you get up to the 200-day, et cetera. But um, it's possible you blow through there, and then you have the next run before you pull back.
okay. 200-day up here, confluence with the trend line up here, David. Any
Yep.
other markets or sectors you want to
Well,
touch upon?
yeah, yeah. Let me just say we talk about the dollar, but the other side of the dollar obviously is the euro, the yen,
Okay,
the British pound, the Canadian
Brizzy.
dollar. I think is going to be very strong. I think the story of the next 6 or 9 months is the tremendous opportunities in the alternatives to the dollar. So I think there's going to be a
Yeah,
big run in the Aussie, in the Canadian dollar, in the euro, and I think again when you look, the dollar um, bottomed out at 95 earlier this year and ran to 115. I think you're going to go down the other side of that mountain, and so that's tremendous upside for a lot of these other currencies. The bond market, I think the bond market is
broken.
no, not at all. I think the bond market has seen the interest rates have seen their highs most
Okay,
likely, and I'm still calling for a 0% 10-year and maybe even negative rates sometime next year, probably later next year, but sometime in the bust. But
yeah,
no, I think there's another leg down to lower lows, and that's obviously controversial because of the breaks we've had. But either way, whether we see that or not, I think rates likely have a big move down here in the next 6 months, and then beyond that in the bust even lower. So, my call on, for example, TLT, which is a 20 years proxy, I think you can see that up to 200 in the bust. So more than a double from here.
wow. Okay, yeah, tremendous move. I think this was the most persistent weekly declines in history.
Yes, absolutely.
In
And you can
history.
see, I mean, that's what the overreaction that we've seen in things, and it's hard to say the stock market's an overreaction. It's 20-25% correction in the S&P is not an overreaction, but the overreaction in terms of the sentiment on the equities and on the bonds, you know, we're nowhere near at this point. I think we're going to be worse than 2008-9, second half of next year, but we're nowhere near that now, and
Yeah,
yet everybody's moved to that side of the boat. Everybody's bearish on bonds and stocks, and that's shifting in the bond market. I do think
yeah,
bonds are
yeah. Because
starting to
people
get
are,
some sponsors.
yeah. I mean, people look at a 4% yield and they go, "Oh, I'll take it." no risk
Yep.
in stocks. I'll take the 4%.
Yep.
So there is an alternative now. So we have both the Fed and we have the alternative that people could get 4% riskless. And this is really going to be an amazing thing, historical thing, to see the market after all this bearish sentiment. And Dave, you don't think the FANG and MAGA stocks are going to lead it? What's going to lead it this time? Because they've been the weakness. There's different sectors that are taking the mantle for
Yeah,
a turn to the upside.
I think you're gonna be surprised because I've been saying for a while it's going to be a broad-based rally. It's not
Value,
going to be narrow. And so you're going to have both growth and value play. You're going to have both
everything,
large cap and small cap play. I think rather than
even
FANG,
cannabis.
I think semis are going to go to new highs, as hard as that's to believe. I
Okay.
think steel, which is on flat on its back, is going to have a great run. Copper's going to have a great run. Commodities going to do well. Industrials look great. I think the industrials will go on to major new highs. XLI, if you look at XLI. So there's a lot that will play, and I will tell you, the small cap looks poised for a big run.
Oh yeah,
My
that
target
was
on
right.
my target
Okay.
on the Russell 2000 is 3,000, and I'm not sure whether it'll exceed that. So, there's some big runs coming. I still am calling for the Nasdaq to 20,000. So that tells you've got to have the big tech stocks play in that. I think they
Okay.
will. You came down to some pretty important levels on a lot of things. Now, I have no idea what Meta's going to do, and I don't talk
Yeah.
individual stocks anyway. But the some of the other FANGs look okay.
They don't look
Certainly
as
Apple.
good as this. I'll tell you that.
No.
Russell's one of
Yeah,
the better looking charts. A breakout here,
yeah, no.
Dave.
Yep, no, the Russell
Confluence.
looks great. Yep.
Yeah.
You could have a move. I can't see the numbers, but you could move
I'll
up
put
to,
the highs were up here at 240 on IWM.
yeah. No, I'm just saying on the way up where that vertical line is, you could have a bit of pause
Yeah.
up
Up
there,
here. Yeah.
pull back there, and then run.
Yeah.
Something like that. But
Yeah.
it looks great. I think the small caps are there. And what's going to be a little confusing for people, because I think I'm hearing a lot of narrative moving towards we're in a new bull cycle, or if this is a new bull cycle, you have new leadership. I'm not sure that the true new leadership will come after the bust. As you know, I'm calling for an 80%
Yeah.
bear market after we make this blow off. The true new bull market, which will be commodities and industrials, will come after the bust, not before it. So this one's going to still have growth playing, tech playing. Keep in mind, growth has lagged because bonds have lagged. Until bonds get going, until interest rates start coming down, the growth is going to have their day a little farther into the rally. So I just be careful. Too many people want to read into very short-term moves and decide relative strength tells you that this is going to be all value. I don't believe that at all.
Okay. So it's not a new bull market. It's actually the last hurrah.
Yeah, it's kind of funny because if you use the definition, obviously, I don't think everybody buys into it, but the definition of over 20% is a bear market. Obviously, it's a bear market this year, but in a lot of ways, this is just another correction in the bigger secular bull market. Yeah, it was a cyclical bear for sure, but I do think that when we change leadership, it's more likely to be. You're going to see some of the signs of that change in leadership in this run, but I think the true change comes, in the next after this melt up and break.
Okay. All right. So trading opportunity to the upside, big break, a lot of markets getting hammered after this in the spring, and then from ultra depressed levels, the new bull market. And we're talking
Yeah,
about
and
years.
well, no, it'll be a cyclical bull market. The secular peak is coming next year, probably first half of next year for sure, probably could be first quarter. So you're going to look at a 40-year secular peak. And then the beginning of a secular bear market that lasts for decades. So meaning you won't see new highs from next year's highs in the indexes. But commodities will be in the move from say 2024 to 2030 will be a spectacular run in commodities, unlike anything we've seen in history. So there'll be places where you'll have bull markets, but it won't be in the indexes.
So
you'll have cyclical bull markets. You'll have a big run from, let's say, if I'm using 6,000 as my top on the S&P for this run up, it could be 7. If it's 6,000, though, an 80% drop would take you down to 1,200. You can go from 1,200 back to 4,000 or 5,000 and have a great run, but it's still within a secular bear market.
Okay, got it. Got the picture. And things like gold and silver could have big runs. Like maybe you could see $60 silver, Dave, and then in the bust, all it'll do is maybe come back to 20 to where it's all starting here. Is that your viewpoint?
That's kind of that would be my best shot.
So it's about a 6-month ride in the metals here too.
Yeah,
and
6 months.
The metals could go.
Yeah, the metals could go, depending on how fast they go. They might take 9 months, they might take, or 8 or 9 months, or they might take 6,
Yeah.
But I think 50, 60 on silver, I think 3,000 on gold. And then they have pretty stiff corrections. And then they're
with the bust.
With the bust. And then on the other side, they will lead the markets for many years.
Okay. Great to catch up with you, Dave H. Contrarian.
Still contrary.
Huh?
I'm still contrary.
You're such a contrary guy. Anyway, I really appreciate you sticking to your guns and coming here and sharing, because I know it wasn't easy for you to stick to your guns on that break to 3,500.
It was funny that day because I came out that morning before the market opened and before the news came out on CPI and said, it looks like we're going to have a successful retest, that you'll turn today. And then we got that first hour that morning and it looked like I was dead wrong, but that looks like that was, basically a successful retest that just broke for an hour.
Right. It did it here too. After all the FANG and MAGA names got hammered, it closed under 3,800, and then the next day, boom, back there. They couldn't keep the beach ball underwater.
Yeah, I think it's going to be hard for the bears to maintain. They've got to be starting. They're still so sure we're going to 3,000 or below, but they got to be starting to question that because this thing just every time you think it's rolling over, it goes the other way.
Yeah, they'll really be questioning it over 4140. So,
yes.
So Dave, great talking to you. I appreciate you coming here and updating us with what you're thinking and clarifying stuff for us. So you could follow Dave on Twitter. He's got hundreds of thousands of people doing it at Dave H. Contrarian. And you can find a guy with conviction when you follow Dave. So if you want someone mushy, don't follow Dave. He's not mushy. All right, buddy. Nice talking to you.
Okay. Thanks, Dale. Have a good week.
You too, buddy.
Bye now.
So that's a wrap, everyone, for Turnaround Tuesday. Good luck. Tomorrow's a big day. You could join the team in 13 minutes on the morning edge. And if you didn't shave, they're not going to let you in the room. So you use your edge in the bathroom before you check into the morning edge. And most of all, don't just count your bushels of wheat. Count your blessings. Adios, everyone. See you guys. Bye, Laura, Frederick, Paul.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.